So it's like middle management, then like planning to move to like other so after okay, maybe maybe thing is 5 years down the line, Horizon I'm planning to start a business.
Very nice.
So two objectives, and I thought okay, it's supposed to be useful.
Very good. Hello, good morning. I'm Dr. Nitesh Shankar, and I'm a physician actually, but I just got a recent job as CEO of new services.
Okay, with which company?
New services.
Okay, new service.
Okay. And
What are they?
they are making weighing machines and weighing bridges. I just changed the line.
Okay.
And I'm hoping to learn something in business. Something to learn about what are the basic parameters you require to run a business, and what you need to do to sustain a business model.
Good. So I see some common wavelength in this class. Good.
Hi, I'm Ramya. I'm working with Emphasis since 3.5 years.
Emphasis.
It's an HP company. So I just want to gain some knowledge.
In which domain you are working?
As of now, I'm testing.
Sorry.
Testing.
Testing of what products?
Testing of HP projects, server management.
I've been working on 12 years, 19, overall 14 years. Right now, Oracle in marketing division as a backend support for Oracle. So it's my profile. I don't know where I'm going. So
Maybe by the end of this course you will realize where you are.
Okay, I mean, very nice, very happy to hear, all of you have some common agenda, right? So, as some of you rightly mentioned, you're all good at your subjects, but you want to somewhere pick up the, general management talk, like people somewhere, who are not as efficient as you, but still will move up in the ladder very quickly for some reason, right? We might not realize that. What is that reason, that is carrying them very quickly? They might have started their career along with us, or they might have started the career, much after us, but they will quickly, somehow go in the ladder, though they are not as competitive as us, sometimes. And also to make yourself, well placed in the industry in the long term, in terms of career and, even the growth, right? So understanding the general management is very, very, essential. So those who are from IT background, definitely moving ahead in your career, you might become a product manager or a project manager, right? Or you might take up various other roles, senior management roles. Understanding the business is very, very important. There are two ways in which my professor used to tell in EGMP, okay, like how we can bring the knowledge into the industry, right? Or teaching, anywhere for that matter. When it comes to knowledge, how to bring it, right? One is through studies, and the other one is through experience, right? I normally used to, suggest people who come to me for career guidance, I do teach for MBA colleges, right? They just come and ask me most of the times when they finish their DP, BE, they will ask me, should I go and join a company now, or should I go for higher studies? Okay. And some people would come and ask me after doing their MBA or something, they will again come and ask me after a few years, should I go for higher studies or should I continue to study, work? So there is no actual, definition for this higher studies. Because how much ever you study, this keeps continuing, right? I have seen people with, multiple degrees but still craving for some degree to take up because they think degrees might save them, right? But some people take the other route, As soon as they finish their work, basic studies, they will go and join a company, try to understand every single part of their business, not within their department, right? More you get into the business, open your ears and listen from every corner, you will try to understand what is your company doing, what is your boss doing, what is your boss's boss doing, and where exactly you are fitting in the hierarchy. That is very, very important, because most of you are working in a very big organizations, right? Understanding the organizational structure itself takes couple of months. Each of the person's responsibility, understanding their responsibility, what shoes they are wearing, can I fit into their shoes, is one of the biggest questions, because it is not a question of only the capacity, it's a question of personality as well. Can I handle that post? What knowledge is required to handle that post? Let us say, suppose your boss is very happy and he will give you a promotion very quickly. Promotion after promotion he will give you, but will you be able to handle that? Right? This is very, very important question. Every one of us should keep asking ourselves. Sometimes what happens, you will stick on to the same company and you are very comfortable with the same company, but you will not be able to jump into another company. This is one of the biggest questions I have seen in many people. Right? They would have stuck in the organization 10 years, 12 years, 14 years experience in one single company, but ask them to go and look out, they will not dare to do it, because they have adjusted to the culture of that company, but only they will understand the real world when they go and see out what is happening. Each organization is very different. People are different, right? It is very difficult to handle the hierarchical structures. Sometimes the directors or VPs, whatever you call it as, they behave very differently, in each organization. Okay, and the naming convention is also very different. Right? In some company, the manager would be really a higher designation. Okay? In some company, okay, they will give VP or some other name for the same position. So it doesn't matter what is the designation you are getting. Okay? I have seen companies like with 4 or 5 years of experience, they will be getting AVP, VP positions. Okay? The salary would be more or less same. They won't increase the salary, but they just want to convince the employees, keep on giving the higher and higher designations to please them. But now what is the biggest problem in this is, if you start looking out with the same designation outside, they would expect higher responsibility from your side, right? To take up more and more responsibilities. It would be sometimes double the responsibility what you are handling in the previous organization, or sometimes totally a rocket science for you, right? It doesn't matter. If you basically prepare yourself, you be a tough person, right? Then you go anywhere, you can survive anywhere, in whichever company. If you feel that I have basics strong, you speak something in marketing language, I can understand. You speak something from HR language, I can understand. You speak something from finance language, I can understand. This is the confidence level you have to. Right? That is what is management all about. Right? People who are into operations are very good at this, because they would be interacting with every department. Right? HR, marketing, accounts, finance. Okay? These are all different areas in the organization. More you interact with these people, more the fundamentals will become strong. And once you get that confidence, you can interact with any people. Okay, then there is nothing like that. You can get into the higher growth rate very quickly. You can get up in the hierarchy very quickly, right? So you can start assuming the roles, new positions, whatever you want. Okay, need not restrict to your own field of experience. And how long you can keep doing the same job, right? You need a change. So this is one of the biggest questions. I am good at software programming, but I cannot keep sitting in front of system and keep writing programs for years and years. Obviously, there is a complications in writing programming. Okay, the complication is not same across the products, right? An individual contribution is definitely required. Any organization you see, there will be two types of roles. One is at the individual contribution role, and one is at the people management role, right? Managerial role, right? More you get in, adding the number of years of experience, right? Chances are that there are openings at this role, and very less chances that you will get into individual contributors role. Do you all agree with me? Right? You might get individuals contributors role. I don't want to take risk, I don't want to handle team. I want to be as an individual. You can choose that. But the problem is what? You might not get as much compensation as a people manager get. Right? Now these two requires a very different set of skill sets. Right? There are a couple of managers, okay, I have seen, who had never worked as an IC role, individual contributors. Right from the beginning, like they would have started their career, okay, in the initial years they might have started as an individual contributor for some process or something, but very quickly move on to team leaders role. Okay, then handling a team itself will become their core strength. Then they will become a group manager or a team manager or something. Then they will get into management. They're very happy to look at their team, take the like objectives from their team manager, right? Yeah, get it done through the individual contributors who are there in this team. They are very good at it. But if you ask them to work directly, they cannot do it. Now, should we appreciate this skill set? Yes. Why? Because if this person is tomorrow promoted, he would not be able to. He is very comfortable to work whatever is given, but he understands whatever his manager says, but not his team members what they are working. This is very, very important. What is the difference between a person who is taking care of the team and a team member? What is the difference between a manager and a team member? Individual agenda. Correct? So, super specialization type of thing. You are good at it. Company also would have recognized that you are good at it. In every appraisal, they might have told you that you are very good. You are a good performer. Undoubtedly, you are a good performer. And they will give you an appraisal. Good, you are an asset for the company. Right? Yes. Individual agenda. Then?
You don't know the whole thing. The whole part, team manager, he knows what has to be given.
The targets are not set. Goal.
Targets are not set. You are not responsible for the target as a whole. You finish your job. After 9 hours, you can go home, sleep well, right? Come back to your.
They are not accountable.
They are not accountable.
That will be for
They are not accountable.
But the team manager or
So could you repeat the
they
question
are accountable
again?
for the whole thing.
Could you repeat the question again?
What is the difference between a people manager and an individual contributor, or a team member and a manager?
But sometimes he does have the role, something like architect or something.
Who?
He'll have, as a individual contributor.
Okay.
As architect, he'll have some projects to complete. So,
Skills are different, so what
Architect is responsible only for on the technical side, on manager side.
yeah, but still the project has to go. It has got deadline.
Yeah, as you guys have discussed very clearly that each of these individual contributor will have some agenda unless the company is running at a large scale BPO company or something, because most of the individual contributors will be doing the same job, because that would be running on a scale, right? BPOs, call centers and other things run on a scale. There will be no specific agenda for each of the ICs. Whereas other companies, they won't add even a single head extra if they feel it is not required, right? If already there are 3 ICs available and they can do the job, why should I have like 4th person? Why should I give unnecessary salary for him? This would be the typical mentality of any companies, right? So each of the IC, individual contributor, should be distinct. That is what is the objective of a good team manager. If a team manager doesn't recognize this, then he is somewhere like duplicating the work. Whatever person A does, person B would also be doing the same thing. Person C is also doing the same thing. That means there is no value addition from this ICs. So there should be a good combination of skill sets among his team. Then this person will start growing very quickly. And there will be job satisfaction among ICs also. If you like what you do, you will stay in that company for a long time. If your manager recognizes what you are doing, and that is what you also like to do, then obviously you will stay for a long time in a company, right? And this would sometimes be a trap also for people, right? So they will stay in the comfort zone for a long time, and then they will suddenly realize that it's been so many years, I should have left the company long back. Let us hope that we'll update our skill sets and we'll leave the company now. Most of the times it happens, right? But what is the problem with this for the individual contributors is, you are day by day, you are working wherever you are interested in, and you are not looking at what your colleagues are doing. Because you are more or less satisfied and you are filled. My plate is filled. I don't know what to look at, I don't have the capacity to look at others' plates also. I don't want to look into it. I am very happy to do whatever I am doing. I don't want to take even a single responsibility from others. Okay? So this is like a, sometimes it will lead to a clashes also between the, team manager and the people manager. But in one way, if you see, after, couple of years of experience, typically everyone should start looking into this. In the initial years, okay, when we are in the, gaining the experience stage, specialization stage, look at your work, perform perfectly. Try to do as much as good things from your side, right? But after, 4-5 years of experience, 5 years of experience, let's say, then you have to start looking at what others are doing in my team. Am I able to understand what they are doing? Because they would have also spent 3-4 years. That means they would have got into some, level of comforts there, and they would not be able to teach you all what they have learned out of their hard, learnings, right? Sometimes the documents might not be readily available in the companies. There will be no training. Knowledge transfer sessions would happen systematically in the companies. These are all the drawbacks for an individual contributor to grow. There might be a website where there are all documents, but you don't have access to that. And you do not know whom to contact to get the access to that website also. But your people manager or someone might have that resources, right? So these are all the cases which will happen. But what I am suggesting is, if you start looking into others' roles and responsibilities, this is the first stage where you can improve yourself, that learn as much as possible from your colleagues. Provided they are also having different set of domain from yours. Okay, not the same work what you are doing. They should be doing something else. Okay, then try to sit with them, understand on daily basis what best you can understand their job. Okay, now observe what your manager is doing. Very, very important, right? If you are not a individual contributor, I am saying this. If you are already a manager, then that's good. I will speak about them later on. So understand how your manager is able to interact with you. Most of the times we feel that managers are dumb, right? They don't know anything, but still they are managing a team. How they would be able to handle the team is a very big question, right? When they speak to you, they speak in your language, right? They can clearly understand what you are doing, what targets you have met, what targets you have not met. In appraisal, he is the person who would sit with you and bring out all the drawbacks about you, right? What you have not covered in this year. That means that person is sensitive. He can understand what you are doing, what you are not doing. When that person can understand, why can't you understand well in advance? Is the first question, right? We can understand ourselves, what we have done, what we had promised to do, so that bridge the gap. Don't give a chance to speak to your manager what you haven't done. Okay, most of the times I have seen this, objectives will be filled in the beginning of the year by every employee, and an appraisal will happen sometimes in the mid-year and in the year end. Mid-year and year end, right? So the complications starts in the year, right? Because some of them wouldn't agree that I had agreed for this. Some of them would say I have partially made, but I was not knowing how to fulfill this. Lot of things. So it is always better to keep time to time a discussion with your manager. Be very clear what I have done, what I haven't done, and what is expected from me. Right? Why I am telling all these things are, nothing related to finance, but the main question still remains the same. Are we subject matter expert. No one can at least dominate in this. This is your core strength. If someone speaks about your core strength, right, you should be knowing how to handle it. Now, most of them stop at this stage. If they speak anything else, they think it is anyway not my cup of tea. Let them speak whatever they want. Okay, my area is this, I will speak only on this, but they will take advantage of that. Right? You should be able to speak generally apart from your subject matter expertise. Right? So what is that they talk? Obviously they speak anything related to business. All business comes in forms of projects. Right? So what are the objectives of these projects? To whom we are working? Is it a captive project or are we working for a client? Right? What would be the captive project? Most of the times captive project would be a cost cutting measures. Right? And for client it is a revenue. If I do some projects for clients, it would be a revenue generation. But in companies, cost savings, it will be equally respected as revenues. When I will tell you, in the times of recessions, 2007 to 2012, every company, US and EMEA region, APJ region, whatever you say, APJ was good, but EMEA and America region was so bad. Okay, at that point of time, the revenue generation was so less. Now, what will the top managers will start looking at it? How to reduce the cost, right? Operations. They will start tightening all the screws, nuts, bolts of the companies. Okay, they will cut the budgets for every teams. Okay, traveling expenses would be reduced. Okay, no frequent traveling for even the higher level managers. Right? Then all the benefits, then like a yearly outing for the teams, everything would stop. Because the cost saving would be the most important thing at that point of time. So many projects would be launched. Okay, at this point of time. So now you should be understanding how they are coming up with this objective. When they say cost saving, how did this idea come to the manager? How is he going to implement down in the organization structure? Obviously, CEO would not sit and decide all the requirements. CEO would be having a lot of people under him, right? Generally, they would classify the business into two structures, right? Suppose all the software companies like Wipro, Infosys, and other things, they do it, like services, what they provide as one head, right? And there will be a head for services and one head internally for their, like CFO who takes care of the business, then chief operating officer, right, for their business, right? This person will look at all the, like things like revenue generation, right? Mainly revenue generation and, like business, how to improve the scope of the business, okay? He would be definitely having operations knowledge also, but there will be one more person who will be closely working with this team and this team, CFO and CEO also, right? So, an operating officer, will have a high responsibility in the organization because that person should be knowing everything whatever is happening in the company. But everything should go through a CFO of a company for approvals, right? You have decided that I will run a project to reduce the cost. Now the question is, after running this project, how to know whether you have cut the cost or not? Or did you simply claim that I have reduced the cost? Someone should be there to approve that, look into the details of the project, understand, yes, you have reduced the cost. So that should come from the finance department. Right? You have cut the cost, you have reduced the cost. Someone has to approve that. Okay. So now let me come to the subject, finance. Historically, how it has been designed in universities, right? How that lead to, the profession. If you look at historically, like olden days, people used to call, accounts means BCom, right? If you go study BCom, then you will be going into accounting side. Then there would be a person called as CA, Chartered Accountant, right? Then, this Chartered Accountant course is passed by an act as from the Parliament side. So it is a government recognized, profession. CA, Chartered Accountant. There is a Chartered Accountants Act passed by the Parliament. So government has made it compulsory that there should be a signature of a CA. Then only certain projects will be accepted. Okay. Therefore, this began to gain a momentum. Later on, government also passed one more act called as Cost Accountants Act, which is called as ICWA. I don't know how many of you have heard of this, right? Slightly losing its momentum. Okay. In the 1980s, 1990s, it was very popular, course, acted as a competitor for the CA course. Okay. Institute of Cost and Works Accountants of India. So generally you can call it as cost accountant. So this is chartered accountant. This is cost accountant. This was more prevalent in manufacturing segments for budgeting, right? Costing, right? When a particular material is being manufactured, machinery is being manufactured, that machinery cost finally, let's say, comes to 1,50,000 rupees. How to break these expenses into multiple parts? Okay, how much is materials, right? How much is the direct labor involved in this? Okay, which can be directly related to per unit of machinery. Let's say company manufactures, 20,000 units of machinery. Each costs 1,50,000 rupees. Each costs 1,50,000 rupees. Now, it is very important for the company to understand how much of this 1,50,000 rupees can be understood easily, so that we can concentrate on that reduction, right? The material, let's say, is coming to 45,000. Directly the iron ore and other things used. And the skilled laborers who are closely working only on this machinery is, let us say, around 60,000. Okay, so 1,05,000. Remaining, 45,000, we are not directly able to allocate for this machinery. It is coming in the form of rent paid to the factory, the logistics, like light, heat, whatever, electricity, then, the watchman, guard and other things. Okay, all indirect expenses. Okay, comes to around 45,000. Now 1,50,000. This is, let's say car manufacturing company, and this is part A. Now obviously a huge machineries will have multiple parts like this. Now there is some other department which is also running similar manufacturing segment, but it is a part B. They act as a different units. Now that machinery costs 75,000. Now it is very important to again understand materials, labor and indirect expenses. Now what is the advantage of doing like this is, when a company has to reduce the cost, they can first sit on whatever is directly allocated to this machine. Materials is costing 45,000. So how to reduce this? Let us look at all the suppliers. Find out the codes. Whoever is giving at the lesser cost, we can buy. Or if we buy in a bulk, will he give a discount? Or will he give us a credit period of 3 months? All these evaluations comes into picture. Okay, that is the advantage of breaking up the cost into as much as possible. Granular level, right? Directly allocated to that particular part, which cannot be directly allocated to that part. You have to break it. Direct material, direct labor,
direct expenses. Indirect material, indirect labor, indirect expenses. This is called as overheads. A technical word came into picture by the word of mouth of cost accountant is overheads. Today we use the word, right? Overheads is around 45,000. We speak different overheads. Sometimes we listen to some lecture and we say it is overheads, right? Which is not getting directly into our heads. In the same way, here also they use the same word, overheads, right? Which is an indirect expenses which cannot be measured for this particular material. So all these decisions are taken by a person called as cost accountant historically. All the manufacturing companies started hiring a specialist role called as cost accountant apart from chartered accountant, right? Then what was the role of chartered accountant? Any company has to publish their annual reports. Okay. What all will be a part of annual reports? Profit and loss account and balance sheet. This is very, very important. Two documents published by every company. Profit and loss account and balance sheet. Apart from this, companies who are sophisticated in their accounting policies will also publish a couple of more documents. It is called as cash flow statement, funds flow statement. Okay. Nowadays, in last couple of years, very few companies in India, but many companies in US are coming up with one more statement called as EVA statement, economic value added statement. Economic value added statement apart from P&L account balance sheet, but it is not compulsory. Okay, but these two are compulsory, right? Any companies have to publish this, especially if they are listed companies. Then they have to publish this on a quarterly basis, right? The P&L account has to be published on a quarterly basis. Okay, so who will do this job? A chartered accountant will do this job. Which department this chartered accountant belongs to? He belongs to a CFO's organization in a company, right? So mainly CEO would be there. Under him there will be a CFO, there will be a chief administrating officer, chief operating officer, chief information officer. Nowadays, like the scope is increasing, where the specialization has increased, right? Yahoo, Amazon, Google, right? Facebook, these type of companies which are mainly learning on a information technology basis, they are actually having a person called as chief information officer, right? They are bringing the good strategies, information from the outside world to implement it in their organizations, right? Earlier, all these things were done by CEO, right? Now it is splitting up. Like you find out something different, then you can create your own, space. That is what today's mantra is, right? You prove something to the company, they will give you an independent space. You work on it. Chief Security Officer, right? Because cybercrime is increasing. People hacking into your accounts are increasing, right? So Chief Security Officer is coming up, right? The Chief Security Officer will take care of all the, infrastructure related to IT, right? That person is not related to, what business you do outside, who are the, clients and other things, revenues, but he will be more or less safeguarding company's data. You might be knowing today is the world of big data analytics, right? Every, day, okay, one new data set TVs it is created, right? Google type of companies, every day how many clicks will happen from each of the region, what are they typing? Facebook type of companies will have terabytes every day. Where do they save it? And once they save it, they have to safeguard it because that is their assets, right? So That is one thing. Chief Security Officer's role has come into picture. So looking at all these things, CFO is just one of the person in the organization, right, who would be taking care of in and out of finance. But there are so many other people who are responsible for business. Now a CEO sits on the top of this, right? Just think for a minute about Narayan, right? Who was also an engineer, who was good at software programming, but how could he establish a huge company like Infosys without having the knowledge of HR, marketing and other things? So definitely at this point of time, you would feel that understanding of everything is not required. He started a business like Infosys, right? Does he personally know what is P&L account and balance sheet? If I ask rent paid, pass the journal entry for that. So would he be able to pass the journal entry for that? Right? Who a BCom student would learn in the syllabus, passing a journal entry would be somewhere studied in all the accounting subjects. So that is not required. What is required is he might quickly understand the essence of it. Rent paid is an expenses. First thing. Yes, it is an expenses. What type of expenses it is? Can it be directly allocated to any of the services which we are providing into the client? No. It comes under general expenses. So it is an operating expenses. Now there should be a way to include this in my services which I am providing to the client. I am charging some, like $2. Okay, per hour or something like that, per resources which I am providing, right? How do I charge this $2 per hour per resource when I am sending 100 people of Infosys to some other company for outsourcing engineers? I charge something for that resource also. On what basis I am taking into consideration? I should be understanding the company as a whole, not necessarily I should be a specialist in all of these roles. That is what we are trying to speak here, right? You are good at something, right? Each of the person would be good at something. That should be the main thing, right? Subject matter expertise is very much required. Okay, when Facebook was started, he was good at like how to understand the people's mentality, and again writing a programming for that. I don't know how many of you have seen movie Facebook, right? A movie came called as Facebook. In that they have clearly shown, like as a student what went behind his mind. In the hostel psychology, he clearly understood the student psychology. Then he started, when hostel students are behaving like this, the same thing is in the outside world also. While he started, a website called as Facebook, where people can share whatever they wanted to. Earlier, there was something else, where you wanted to share only with your friends. But there are something which you want to disclose openly, there where the Facebook came into picture. You want to share everything in public without hesitation, and there needs to be a common platform for that. There is a huge business. Let me start a company called as Facebook, right? Apart from that, earlier there might be some other softwares like Orkut and other things where you are close network, like only you are sharing something with your friends, but you wanted to share also with the open world. Okay, so that created a business. But definitely that person could not be knowing what you mean by listing a share in a company, how to raise a funds in the form of like share capital, what do you mean by dividends. This is all none of his business at that point of time. At that point of time, he had a zeal to start the company. He had an idea. He wanted to come up with his idea to the outside world, right? That is a time where venture capitalists would come into picture, right? Every bank has one wing called as venture capitalist wing. State Bank of India Venture Capitalist Fund, Canara Bank Venture Capitalist Fund. Apart from that, investment bankers also will have a venture capitalist, Goldman Sachs, right? JP Morgan. All these people have a venture capital wing. What do? They come as an angel investors. They help you to start business. Why I am telling this is, I heard 2 or 3 people from this group said they have an idea to become entrepreneurs, right? So obviously, you need not worry about all those things which you have not understood till now, right? Understand one thing, what you wanted to do. That is more than enough. There are people who can help you in all the other aspects. If you are good at what is there in your mind, this is the service I am going to provide, this is the manufacturing I want to do, whatever it is, then there are set of people, as I said, angel investors or venture capitalists, who will give you an advisory, right, consultancy, network along with capital. This is different from your bank loan. This is different from your bank loan. You go to your bank, you ask for 10 lakhs as loan, they will give you 10 lakhs loan and they will be waiting for you to repay. Whereas VCs are not like that. They will give you 10 lakhs loan, not loan, they will buy a partnership in your business. They will never give it as a loan, they will buy it as an equity, but they will provide you all the other help required for you. They will create a network for you. They will show you the relevant people whom you can contact for your business. Advisory, consultancy, they will do. And they will wait for your business to grow. After 4 or 5 years, that is the normal period they will stay along with their entrepreneurs, and they want to quit after 4 or 5 years. By the time if your company has made a good name, you can obviously sell their portion to someone else, take the money and give it back to them and send them. Okay, so that's why they are called as angel investors. Right? You might have heard about Narayan Murthy's story. He has said, right? Top banks of India in 1980s, when Narayan Murthy and his team went and asked for the loan, none of the banks were ready to give them a loan. For one simple reason, the banks had a concept of looking at their project reports. Even today they do that. If you apply for a loan, they will ask for a detailed project report. Apart from presenting a project report, they also want to take a look at what you are doing, business, manufacturing or something. They told them, show me your product, we'll give you a loan. Narayan Murthy and team tried to explain their best at that point of time. It's not a product, we are writing a program. It's a software program which runs on the back end, and we are giving the services. We cannot give the loan for what we cannot see. Can you show the software program? I am speaking about 1985, 1990s, when Infosys wanted loan. None of the banks offered them the loan for a simple reason: they didn't understand the business, because IT was not the main business at that point of time. They were giving loans for all the manufacturing sectors. They were giving loans for any type of other entrepreneurs, but they never heard about something called as IT sector at that point of time. They ignored. They didn't give the loans. Even the MNC banks which were there in India at that point of time offered them the tea but not the loan. Then obviously they somehow accumulated some money with their group friends. Finally they approached the VCs, and later on in 1993 they came for an IPO. Right? In 1993 they came for an IPO, and 10 rupees share was sold at 65 rupees in 1993. Okay, each share was 10 rupees, was sold at 65 rupees, that is 55 rupees premium, and a huge oversubscription happened at that point of time, and they returned back the money of VCs at that point of time. This is how the exit route of VCs will happen. When will VCs exit? When the company comes for an IPO, they will exit. Before that, there are a couple of other routes, right? You might have heard about PVR, theatres, right? Recently, I got a call from ICICI Bank. They have a tie-up with PVR. PVR is planning to come for an IPO 2 years from now. But they need money now for their expansion business. They don't want to go for a bank loan. See the constraints which the business would be having. PVR wants to expand their business, but they don't want to go for a bank loan. At the same time, they don't want to go for an IPO as of now. Right? So they are planning to come up with the concept called as private equity. It's an equity share only, but they will run at the private share, not public offer. It's a private offer. Right? Through some of the channels. ICICI Bank, they have a tie-up. In the same way, they might have a tie-up with some other banks also. Right? So what the ICICI will do is, they will call their clients who are having trading accounts, demat accounts with them. They will ask them, are you interested in investing in PVR? Now, right? 2 years down the line, PVR will come for an IPO. At that time, they will give your money back, right? With some returns. How much is that returns? It is not promised because it is an equity. Equity doesn't promise us returns. It will have maximum risk, it will also have maximum returns. That is the difference between a loan and an equity. As I said, VCs will participate in the form of equity. They will not participate in the form of loan. What is the difference between loan and equity? In loan, there is a fixed pay. They would have promised 10% rate of interest, they will give you only 10% rate of interest. Whereas in equity, when the company grows, all that belongs to shareholders. Higher the profits, higher the returns. Lower the profits, lower the returns. That is the concept of equity. Right? So, this private equity, 2 years down the line, gets converted to public equity. At that point of time, people would get their money back. Now, all this time, I spoke something else. But it is all I am saying, you need not be a CFO of a company. CFO of a company is a recognized role who understands finance. But finance is again a very vast field which comes in other formats. A VC person who is contributing money to your business should understand finance very well. Okay, but I just wanted to introduce you at the company's level, a person with finance, where does he stand? A person with knowledge of finance can go to a CFO level. Okay, really he can also become the CEO of the company based on his knowledge in other areas. Okay, but at the same time we understood that a CEO of the company might not be knowing everything, but he should be good at what they are doing, understand in general what is finance and other fields. So I now broadly classify finance into two types. One is the corporate finance and the other one is market finance. Okay. This is a broader classification I can do in my last 10 years of experience, what I have understood the finance. Okay. Because sometimes within finance people hardly interact with these two fields. Okay. Very rarely I have seen people interacting with both of these fields. But there are people, I am not saying that. Okay. But some of them would be too good at corporate finance, not knowing anything about market finance. Some would be too good at market finance, but not good at corporate finance. Okay. But these both are part of finance. Okay. People, initially when they start their studies, they will start studying market finance theoretically and not as a part of finance subject, as a part of business studies, business environment. These are the names which would be given, okay, at the degree level, at even MBA level, right? Only when they come for specialization subject in finance, then they will get to know, okay, all these things which we studied in theory in some other subjects now are applicable in market finance. Okay. Whereas corporate finance, from the beginning is systematic. They will take it in a systematic way only. Accounting department is a part of corporate finance, right? Whichever accounting departments you have seen in your companies, there is nothing called as an accounting head. Okay, it will be a part of CFO's business only. Okay. Are you all able to relate this to your companies when I speak, right? Quickly, you just go to your organization structure, you can quickly relate your known faces in your mind. Okay, this person is taking care of this business, he might be doing this and all those things, right? So corporate finance is a place all these times we discussed is responsible for ultimately P&L account and balance sheet. This is the largest responsibility given for this department. A company at the top level, CFO of a company will do the same thing as a local chartered accountant does for some people here, right? I as an individual client go to a roadside chartered accountant, pay him 1,000 rupees fees, he will help me to file my IT returns, right? Filing an IT return is as good as considering all my income, expenses stuff. Otherwise, how do you claim deductions? Right? So, as a salaried employee, most of the times Form 16 will take care of it. But let's say I am also having some other sources of income, like I gave a guest lecture here, right? It should be shown under other sources. Other sources apart from salary. So any heads of income can be classified like this: income from salaries, income from house property, income from business and profession, capital gain, and other sources. This is very important for your personal thing also, not as a subject, just to file your income tax. If you have different sources of income going forward. Right? So salary income anyway Form 16 companies give, so that will take care of it. But people might also have income from house property. Either you might have let out the property, or you might be residing in your own property, or you might have taken housing loan. So most of the times you will claim housing loan as a benefit. Why? Because this will turn negative. That's why your income tax will come down. When you club all these 5 heads of income, when you take a housing loan, people take housing loan most of the times to reduce the tax. Because when you pay an interest amount, EMIs, because you are living in your own house, you don't have any income, but you have an expenses on house property, so your income turns negative. Your salary income, let's say, is 1 lakh, whereas your EMI is around 10,000, so now your income is 90,000. It can be adjusted against other heads of income. That is the importance of understanding these 5 heads of income. Okay. Then business and profession, right? People who are running a business, selling something, manufacturing and selling, that comes under business. And profession, obviously, all the other professional areas, doctors, lawyers, okay, all this comes under professional income, right? Capital gain, when you sell any asset and make money out of it, it is a capital gain, okay? Like selling a house property and making a gain, selling shares. You deal in shares. Anyone buy and sell shares? Right? I mean, yes, it is definitely one of the way you should increase your returns, especially now the stable government has come and the market is in its rally, 28,000 points. Never believed, in last couple of years back, if you see the markets will touch 28,000, right? Now it is going up. This is the best time that every one of you should open your personal trading account and demat account. Don't forget, do this. In a long run, markets are very bullish. Okay, it would give you much higher returns than what your post office savings bank account or a fixed deposit account or even your mutual funds can give. At most you can save this 80C, section 80C of Income Tax Act. So you might already have PF to show 1 lakh is the maximum limit here, right? So in 1 lakh rupees you already have a PF. So how much do you want to invest in mutual fund? Only remaining amount to claim this 80C deduction. Apart from that, you don't have any benefits investing in mutual funds or fixed deposits or LIC policies. Some people might be having insurance policies, that is good, but I am telling you, all your savings systematically channel through markets, right? Market is always not risky, right? There are companies which are very, very safe, right? We have 2 flagship indices in India. One is called as Sensex and one is called as Nifty, right? Sensex is made up of 30 companies and Nifty is made up of 50 companies. You know which are these 30 and 50 companies? The topmost companies of India in terms of their size, in terms of volume, daily tradability, right? How much this stock is bought and sold by different class of people. Who are all these buyers? It can be even insurance companies, they buy these companies. Mutual funds buy these companies. Foreign institutional investors buy these companies. Pension funds, provident fund people buy in these companies. So the top companies of India which represent their respective industries. It will not be all from the same industry. 30 companies will not be from the same industry. 50 companies will not be from the same industry. Right? So all 30 will not be IT sector, all 30 will not be media, all 30 will not be telecommunication. It will be the topmost companies within that industry. So these are like, the companies which are taking India to the next level. Right? Investing in these companies would be more or less safe. As a beginner, I am telling you, right? So if you don't have a trading account and demat account, just contact any one of these service providers, ICICI Direct or ILFS or Anand Rathi or Sher Khan, right? Relegare, any people, that doesn't matter, right? Open an account, start systematically investing yourself, understand the markets, it's not a big deal, right? If you closely watch the newspaper every day, right? And there is websites called as moneycontrol.com. finance.yahoo.com, right, which gives every possible information of these companies. They give historical prices, they give P&L account, balance sheet of these companies. What else you need for understanding a basic level, about the company and investing? These websites gives fair, good information about the companies.
But what about there's a dollar crash expected 2015?
Sorry?
Dollar crash is expected 2015 and that is also impacting India.
Exactly, I am telling you, keep an eye on the stocks which you have invested. These are all the top companies, firstly. And in equity, there is nothing like a loss. Once it comes down, again it has to come up. 2008 January, market started falling from 20,000 points. By end of 7 months, it came down to 8,000 points. Right? In span of 6-7 months. But now again, where are we seeing it? And again in a year so, it went back to 15,000 points. It did not stay here for a long time. Again it came up, took a U-turn and went to 15,000 points. From 15,000 points it took some time to reach 20,000 points. Then it went to 22,000 points, stayed here for a long time, 22, 23,000. Now it is there around 25,000 plus. So, historically, look at not only India, any country for that matter. Very simple example I will tell you, very quick way to understand this. NSE started only in 1993. NSE started in 1993 with 1000 as a basis points. 1000 basis points. Today it is somewhere around 8,000 points. It has grown 8 times. Your money has grown 8 times. BSE started in 1875. 135 years old organization, BSE, Bombay Stock Exchange, which started with 100 basis points. Today it is 28,000. What do you mean by this 100 moving to 28,000 is, this BSE is having 30 companies. If all 30 companies, not all 30 companies, on an average this 30 companies tomorrow, Monday, let's say it goes up, then this 100 points become 102 points. Percentage change. Okay, let us not look into it. Like that, 100 points has moved to 28,000 points. That means India has grown these many times historically. That doesn't mean that it never came down. It would have gone down, but it has come up. Right? So, this itself is the biggest growth. People are comparing gold prices to Sensex points. Right? Gold points was 16,000, right, per 10 grams, I am speaking, and compare Sensex also when it was 16,000. Now it has gone to 28,000. Now gold is standing somewhere around 24, 25,000. It once had been to 31,000. Now it has come down again. So compared to even gold, Sensex has proved stability. Stability wise, I am speaking, safer. I mean, day by day this mindset is changing actually. People are recognizing the benefits of the markets. Okay. I don't have money so much to start a business. Someone else has started the business. Let me participate with them. That is an idea of stock market. right? I want to become an entrepreneur, but I don't have the idea what to do the business. But someone else has already started a business. Let me introduce my money in their business, get the profits out of it. That is stock market, right? But systematically, if you closely watch, there might be a subject, one of the subject in your whatever you are studying now on stock market. But just I am giving you a hint what you can do, right?
So, what is the return per year you can expect, or is it a long-term kind of a thing?
At least 15% is an average returns which people have gained from Indian markets. People have gained from Indian markets. I normally have a slide I will show you. If I connect to the laptop, I will show you. I was telling you about Infosys company, right?
Yes.
They in 1993 they started at 65 rupees, right? So if anyone would have bought 100 shares at that time, into 65 is like just 6,500 rupees if someone would have invested at that point of time. Till now, I don't remember, but roughly they have come up with, this is 1993. In 1995 or 1996, they come up with 1:1 bonus shares. Bonus shares means what? Can anyone of you? If you are sorry?
What is told for initial you won't give you one more share.
Yeah, why do they give that?
As a dividend?
Yes, exactly. That is very right. You are 100% correct, right? Yeah, sharing profits, exactly, right? Instead of giving it in form of money, they give it in form of shares. Why do they do that?
That's going to grow again.
Huh?
That's going to grow.
That means they have some projects in hand, they are falling short of money. Right? The company has a lot of projects, expansion mode they are into, they need money. What they can do is they have to go for a bank loan, or they again have to issue the shares. Instead what they will do is call for a shareholders meeting, convince them. See, we have 50 crores profits with us. If you want, I will give you in form of cash. Declare in the form of cash. Or withhold. Sacrifice one more year. We will give you one share now for every share you have. I will reinvest this 50 crores. Because what is happening in the balance sheet, this is the balance sheet of the company. Liability side represents what company owes to others, and asset side represents what company owns. That is the only difference. This is owns, this is owes. Company made 50 crores profits. It belongs to whom? Shareholders. So where should it come? Asset side or liability side? Liability. It has to be paid. So 50 crores will be there as surplus. Okay. And there is a cash. 50 crores cash. So always balance sheet should tally. You know that asset and liability should be always equal. Now what company is trying to do? Remove this surplus here. Call it as share capital, 50 crores. Only name got changed, but cash is still there with the company. Now company can use this money for anything else. But instead, if they pay as dividends, what happens? This cash will go out, surplus will also go out. Correct? Companies do this when they don't have projects in hand. So don't believe companies which pay heavy dividends. This is one of the flaw in the stock market. They will give it in big headlines, company paid higher dividends this year. If they pay higher dividends, they don't have much projects in their hand. That means their growth rate will be less. Next year they don't grow much. Companies have to retain more and more money in order to grow more and more. Okay? That is the formula of the sustainable growth rate. Growth rate formula is equals to return on equity into retention ratio. How much they retain into that year's return on equity will be next year's growth, higher return on equity. Okay. So they gave, there and there I have to confirm so that it will be, instead I will just say 1:1 bonus shares and I can continue, but just piece of information.
9,600 invested in 1992.
Sorry?
9,600 invested in Infosys in 1993.
Huh.
In today's price, there were splits, bonus, and appreciation. All that included has crossed 6 crores.
Exactly. That is what I want to tell in numbers. I want to show that in numbers. How did it touch 6 crores is what I am telling you now. Right? So in 1995 they issued almost 1:1 bonus shares. So 100 shares became 200 shares. In 1997 or 1988 they came up with 1:3 bonus shares. The company was doing very well. No competitors at that point of time. India was recognized as an IT hub, and every companies wanted to outsource their business to Infosys. Amazing job. Like brand equity was very much. Infosys was recognized like one of the top Indian company at that point of time. Right? So 1:3 bonus shares. So those who had 200 shares, for every 1 share they used to get 3 shares. So 200 shares means they will get 600 shares, right? Plus your existing 200 shares, right? So you will get almost 800 shares.
10 rupee share became 11,000.
Sorry?
The price of 10 rupee share was 11,000.
Exactly. That is what they did in 2000 or 2001. They had a split because, as I said, the shares started trading around 10,000, 11,000 rupees. What is the problem with the stock trading with such a high price? What is the problem for the company? If share prices go very high, is it a problem for the company?
People tend to sell.
Volumes will be
People tend to sell and
There
get
is no trading.
One thing, yes, people tend to sell. Second one is
volumes because not everyone will be able to buy 80,000.
exactly. Even if I want to buy one Infosys shares, I should have 11,000 rupees. Instead, what I do is I go and buy some other share which is available at 1,000 or 1,500. 10 shares I will buy instead of buying one Infosys share. So volume will come down.
So that's psychological factors also.
And already people think it is overpriced. I don't want to get at this level. What are the problems if volume come down?
the number of investors goes down.
That's what. Volume coming down means number of investors coming down. If number of investors comes down, what is the problem? Now, I want to cover there and there the points related to that. Otherwise, it's not a deviation. Don't think it is a deviation.
Only set of people would invest in it. And
Correct. What is the problem with that?
And it's about the numbers. Even the lower people can invest in the company. Thereby the revenue can be generated. Not only 11,000 people, shares 11,000. If he wants to buy 100 shares, it's more than a lakh or something.
Correct. So people doesn't participate. They will buy some other company's shares.
So for the guys who are at 50,000 want to invest in the company, so if they want to come up with investment on that, so they have to lower the price so that the other people also participate, thereby you can get the revenue generated.
Correct. All these things are correct. My question here is, if the volume reduces, systematically what is the problem with the stock market? The stock market is today running under the concept of your economics subject. I think some basics economics classes have been run. There is a concept called as perfect market theory. Have you all studied this? You might learn this. Right?
The elasticity of demand, they are all getting.
Okay, yes, exactly. No issue. I mean, all are related topics, right? Generally, let's say there is only one shop near your house, and you want to go and buy the commodity. You have to pay the price whatever that person claims to. But you just go to a market where there are large number of sellers sitting next to them. You want to buy basic vegetables. Go to, normally people go to market during the festival seasons to buy flowers, vegetables and all, because they get at lower prices. One, why they get at lower prices is, the same seller, same commodity seller, you would find 10 people. Right? Tomato means there would be 10 people. Flower means there would be. So, price equilibrium. This is called as efficient market hypothesis theory. A person got a Nobel Award for this. Okay? A person by the name Eugene Fama came up with a concept called as efficient market hypothesis theory. This can happen only when the markets are efficient. When do you say markets are efficient? When there are large number of buyers on one side and large number of sellers on the other side.